too many webinars.
But you need to download from the cloud, otherwise your space will get blocked in future recordings. You may be thinking it's recording, but it won't.
Yeah, exactly. That's one of the reason I'm hesitant. Yeah.
All right, then shall we start?
Yes, please.
All right, then. I'd like to welcome all of you to this exclusive webinar featuring the co-founder of one of the biggest companies or one of the most emerging companies in the alternate investment space called Starta Prop. We are joined by Mr. Sudharshan. Thank you very much for joining us today. Sudharshan Lodha happens to be the co-founder and CEO of Starta Prop, a company that offers an investment platform, an online investment platform that people can invest in premium commercial real estate. And this has been done in a way to ensure that people get to invest in the commercial real estate space without having to spend too much money. The minimum investment obviously starts from 25 lakhs, but there's more to it. And that's exactly why we have the co-founder himself. We'd be happy to learn from him. And to give you a quick intro of what he is exactly, he's a law graduate from the Dr. Ambedkar Law University. He's an experienced legal counsel in the real estate industry and has expertise in advising, drafting, negotiating, and vetting transaction documents pertaining to real estate acquisitions, investments, financing, and much more. And from what I read, he has represented over $1.4 billion worth of investments in the real estate space, which is quite astronomical. And from what we hear, the alternate investment space is a $1 trillion market. It's expected to grow to the extent of $1 trillion by the end of 2030. And with that in mind, I'd like to quickly go ahead and ask Mr. Sudharshan to introduce himself to the audience. I think it's always better to hear from the person himself than for me to tell the audience. So would you mind going ahead to introduce yourself to the audience?
Okay, thank you. Thank you so much, firstly, for having me here. Quick background, adding to what was just spoken. First, Marwadi as a qualification, if I have to put it up that way, which means business and blood from day one. That's been the exposure as such, where I think the objective has only been about making money. More than anything else. Never had the job mentality as well, because it's imbibed from childhood that you need to think of doing business as such. So that is definitely one bigger point, where we are today, why we are today, and maybe at a younger age, if you have to put it up that way, although I still think I'm a little older to what I could have achieved. But having said that, it's also because of, the family values and what you've been learned in the past. Was obviously a lawyer prior to this, having some experience in real estate in terms of structuring, negotiating all these legal documents. And I think in real estate, apart from understanding the commercial side, I think 90% is only understanding the legal side of it, right? So that was the most important parameter, which, gives me an edge. And like I said, your first qualification of being a Marwadi, so business side is already in. So you don't need to focus on, understanding the business much. So that's been the journey. And then Strata happened, and, we'll talk more about how Strata happened, how things work as we progress.
All right, I think that sounds wonderful. I think you've given us an introduction of what is it that you are. But now we'd like to know about Strata as a company in general, because there are countless companies that are coming up in the alternate investment space. And a lot of us in the industry are already aware of what makes Strata very special. They're very transparent. They have an exceptional online platform that provides access to commercial real estate, A-class commercial real estate. But we'd like to hear from you on what is it that Strata offers in general.
Yeah, so I'll just tell you what my dad did very efficiently, and where Strata came from, right? So my dad's point of view was very clear. Hey, if business is there or not, rental income will always be there, right? Because somebody or the other would always want to do some business or the other, and he'll always want some space. And that is the thing. Otherwise, worst come worst, you have an asset value which is not going down, right? At least it's flat. Like businesses can have a risk where you may lose your capital also, but this is a part of investment or an asset. We're not losing capital, worst come worst, right? So he went on to create this rental income portfolio for himself over the last 20 years. And that's how I've been seeing, right? Like how he's built, what he's done. And my vision was very clear that if today dad can have the ability where today he can do 100 other things because he has, strong rental income coming as passive income, and try certain aggressive business decisions, or even I would say a little more riskier calls, which otherwise you would not if you don't have a backing. I think in my opinion, is a luxury, right? And that's all thanks to his vision and call that, I'll create a good rental income portfolio, which will take care of my house expenses, take care of future expenses for children, marriage, education, etc. Also, etc. Right? But being from a traditional family, you can't think of leveraging beyond a point. Granddad is there, so you have restrictions with how aggressive you can be with business, etc. as well. So I realized the need that if one family can do, I think we can replicate the same for multiple families in India as well, right? What we realized in the whole CRE space as we move deeper, it's a very expensive asset class. So it's not for all from that standpoint that today in Bangalore buying UBCT is 30,000 rupees a square feet, 10,000 square feet, a normal floor plate, talking about 30 crores to be deployed, right? It's not just lifetime of savings, sometimes it's lifetime of earnings required for you to buy a floor of UBCT, right? And by the time you have that money, that 30 crores would be 40 crores, right? So we realized that how do we solve for this as parameter number one. Second parameter, we realized that how do we find such opportunities? These are not your listings which you find on 99acres.com, nobroker.com, magicbricks.com, right? These are expensive real estate and it's traded in a very small community, right? People who have the ability to afford, which is like 0.1% of India at max, right? So that's where these asset classes get traded, they know of, and they keep buying some things like that. And the third bigger parameter, you touched upon alternative investments, right? The whole AIF real estate business in India has really performed the worst amongst all the other AIFs, right? Because all the AIFs have pretty much been into a structured equity in a way where they funded under construction developments with developers to make that 18-21% return. So your tier one developers like your Prestige Brigade are never going to take 18-21% because they're like, hey, it's not affordable for me. So they go and tend to back a tier two, tier three, tier four developer as such, and then they get stuck, right? So all the large funds, I don't think I need to name, everyone knows, have not, in the lieu of giving 21-30% return, have not even given single digit return. There are a few funds who've lost money for investors after 10 years, right? The investors told, I would have rather kept that money in FD, I would have made 2 times in 10 years instead of losing money after 10 years, right? So nobody was catering to a rental income portfolio for investors as such, right? So we realized why not create a rental income portfolio? And you see very smartly, all the international funds, nobody invests into residential. All invest only in commercial real estate, right? So only these Indian funds invest in this because, again, whether it's foresight or the way these guys want to operate, etc., or the quantum of money they can raise in general, like how these American, Canadian, Singapore funds can raise is a different cost of capital. Hence, these guys are in that space, right? But then the idea was to create that and create a rental income portfolio. A normal Indian who makes about a 1 to 2 crore salary, assume, or a 50 lakh rupee salary, who's bought his own house, wants to park a chunk of his money into real estate because, like I said, that capital preservation, capital safety mindset is very important. So hence we thought of why not create a rental income portfolio and how do we solve for it? So Starta is nothing but just a legally structured financial product where you can invest into real estate. It's not subject to stock market volatility, unlike multiple other instruments. In fact, if recession comes, your real estate is going to do far better in comparison. Your returns are far better. And more importantly, these investors today only had residential real estate as an opportunity to deploy. Right? So we have investors who have like 5, 10, 14. I've heard 14 as the highest number, when we talk from people just to understand, 14 apartments in Bangalore. We're wondering, what are you doing with 14 apartments? But he says, I make 1-2 crore rupees every year. I bought my own house. What do I do with that money? How much do I buy stock? How much do I buy gold? Obviously, a large consumer is real estate only. And every year I buy one, and I keep owning and I keep getting rentals. Overall, from a portfolio return standpoint, just his cash on cash yield to his returns are about 2.5%. I mean, because his earlier investments are giving about 4, the newer ones are giving about 1. He's making on an average about 2.5%. So we realized that how bad the whole personal finance segment is in general. I think the most underpenetrated segment in India. We said, let's be the real estate wealth managers and advisors for people. So we're not a broking platform. We identify an opportunity. We have a rationale around why we are wanting to buy it. And then we do it. It's not like another listing platform where 10 properties keep getting listed. We list a property a month. We curate more than about 30, 40 properties, filter it out, and then one gets listed, right? So hence you see our track record, you see our, the tenant pedigree, the asset quality. And in terms of value creation for our investors, we've created tremendous amount of value as well, because multiple assets of ours have gone up 30, 40% already from the time we've got, we acquired those particular properties. So that's in a nutshell, creating a good alternative real rental income portfolio for investors apart from residential is what Starta is all about.
I think that sums up pretty much everything.
That's
Strata
brilliant. You
is
have just
supposed to
covered
be.
almost all the points. And as initially Adarsh also just highlighted, real estate in India is likely to just probably cross $1 trillion. Probably just if you go to the past, probably actually just in 2020 to 2020, when we posted around $200 billion and touching $1 trillion by 2030 in less than 8 years. That definitely just tries to just convey us just how important the asset class is going to be. And apart from that, actually, just even if you look at the kind of alternate investment in real estate space, in last 1 year, it has just grown by 26%, which is a whopping kind of a growth, and which is unbelievable. And today you could see just close to just more than 20 plus alternate investment vendors are there in India. I don't want to tell the exact number. By the time we just have this webinar, I think 2 or 3 more companies may also just emerge kind. So it's going to be pretty robust, so just for those who does not know as to just what is alternate investment real estate, let me try summing up in one word, because normally if you have one asset where you want to just live in, if you want to just add up another asset, your idea is obviously the capital appreciation or the rental income. It depends on the kind of investment that you are getting into. Maybe just break up by property, you say just residential, commercial, industrial plot. So it all depends on what kind of property investment that you are looking at. Coming back to the alternate space, rather than just big borrowing a lot to just buy an asset, why not to just invest the minimal sum of money that you have in your hand? So if you want to buy a plot today, it's anywhere just going to be 40-50 lakhs. I think it's going to be less than that, even if you go slightly far off. Instead of that, why don't you just try just investing maybe 20-25 lakhs that you have in your hand without borrowing? And why don't you try investing to just get both capital appreciation as well as the rental yields? So that's a kind of what to say, a summary of what exactly an alternate investment means for you. Coming back to the same subject, actually, I want, it's always good to hear from the horse's mouth, so I want to just listen on one line as to just what way this alternate investment you feel is much better than the physical ownership in the real estate space. So how much have I said and done? It's always good to hear from you.
Ma'am, so just to highlight, for people who are investing in real estate, right, it's not their business. People who are into real estate business, they develop, they sell, and they walk, right? Because that's what the real estate business is. So people who are investing are putting their passive money and ensuring money makes money for them. That is the whole idea, right? Challenges comes today, like I said, I was mentioning about one of the investors who have about 14 apartments, right? His bigger problem over the weekends is going and checking every apartment because tenants keep leaving, tenants keep finding, some issues some tenant creates, taking care of property tax, insurance, society meetings, multiple things. He's like, I'm so irritated because my weekends are my weekends goals, just managing these investments also. And luckily it's all in Bangalore, so he's able to manage also, right? Otherwise, imagine if he had some in Bombay, some in Chennai, some in Hyderabad, it's an impossible parameter also, right? And then finding people keep coming for site inspections, multiple issues, right? Which he has. So people who are investing in real estate, it's like I said, it's their passive income, right? Which means asset management, tenant management, asset upkeep, taking care of property tax, insurance, multiple other things are a big nuisance for people, right? Yes, you're making money, but then is it worth the time and effort which you're putting in also? And is this what your expertise is, right? Today, we work with close to about 1,000 real estate partners, realtors today, right? The chances of me managing your asset, chances of me leasing your asset, chances of me doing, and 1,000 times better than you, because an investor might know 5 brokers, 10 brokers at max, right? We are already working with 1,000, 1,500. We'll be at 5,000 year end. My chances of working with this community for my assets, I'll outright beat you, right? So I would say what alternative investment is, like you mentioned, the point that you can diversify. across multiple assets, etc. But then the bigger game is also about asset management post you invest, right? So at Strata, our work starts after we acquire a property. Selling an asset on a platform is not our work at all. If we've underwritten it, we know this asset will do well, or at least we hope the asset will do well, is why we recommend this investment and say, hey, I think it bases this parameters, bases the past, the precedent, what infrastructure is going to come up here, whether it's a metro or a highway or whatever, why we envisage investing over here is why we make an investment fund, right? And that's when we go about doing it, right? So that way, and then we manage the entire investment, take care of the whole shebang of, giving investors access where they can track, because today people buy properties, inherited properties, they don't know where the property documents are, all that problems, right? Here, everything is on the dashboard for them to track, etc. So, in a nutshell, alternative investment is not just about diversifying, but it's also about ease of management, more than anything else, that I have someone who's a professional, whose only job is doing this, because I'm into that business, I'm into real estate business, rather than IT professional or a doctor who's not into real estate business, right? So that it is. But just to highlight, you brought about plot of lands, etc. Honestly, one of the best investments is land, right? It is perhaps the only appreciating asset. Now, one of the big advices which we've got over the past from multiple of our investors and advisors has been that if you have money and if you don't need passive income, the only thing you should park your money, and if you have a 15-20-year mindset, not a 5-year, 10-year mindset, 15-20-year mindset,
True.
there's no better investment than land in India, because urbanization is only going to go up from whatever's worth. Industrialization is only going to happen better and better. And land is one of the best investments you can make because it only appreciates. There's no question of depreciating.
True, undoubtedly. And Sudharshan, having said that, you spoke about the kind of values of the property that you are picking up, right? You just look at the kind of progress probably that particular area would carry, and whether metro or other facility is going to come up, all those things. So so when you talk about that, we have to talk about the valuation. Who does the valuation for all these properties, and are the valuation reports available for the advisors or distributors or for investors?
Correct. So I'll give you two very important things, and I'll just share my screen to give you. So we work with this company called PropStack, who's one of our investors in our company, right? And we have an exclusivity arrangement with them on this. I think in real estate, one of the biggest underpenetrated sector is there's no data available, right? Like my neighbor, at what price did he buy his apartment? I have no idea, right? The one who stays above, I have no idea. So this platform gives us access to all the sale lease data of every commercial property in the country. So I know, okay, hey, new leasing is happening at 130, 135 rupees on an average. So that way we know to some extent we are close to MRP of a particular property. See, real estate does not have an MRP, but having data and having 95% accuracy is close to the MRP you can get out of it. So we look at all the sale comparables in that market. We look at all the lease comparables in that market. We look at how realistically the market has grown, across. Let me just take Outer Ring Road as an example. Outer Ring Road as an example, how much stock existed back then in 2012, how much stock exists right now. You see the growth from 14 to 36. It's 2.5 times of growth. How the rentals have grown. Rentals were 43, right now rentals are about 77. So you see, even, which means in 7 to 8 years of time, your property price has more or less doubled also, right? So this kind of data we get, very handy. We offer this to our investors as well for them to do it. We take property valuation reports from one of the large IPCs as well beforehand. So again, they are well aware. So that way there is a lot of data which builds transparency, and people can take some benchmarking that, okay, am I buying at a discount? Am I buying at market price? Am I buying at premium? Correct? People just want to know at the price. Let's assume you're in Bangalore and we have a property in Hyderabad to buy. Now you're interested in Hyderabad, but today you're not investing directly because you're like, hey, I don't know the laws. I don't know the pricing. I don't know how it works over there. How is the registration process? Because real estate law is literally a PhD segment in itself, because every state has a different way of operating itself. Like Bombay, for that matter, every micro market has a different way of working.
Really?
So this way we are able to handle everything. We do all the work, understanding in depth, and then come to you. So you invest in the growth markets, which today an investor cannot sitting in Bangalore. Right? Obviously, Bangalore is the best growth market in general, but obviously there are other markets like Gurgaon, like Hyderabad, Pune, Chennai, where one would like to invest, but today are not because they just don't know how to go about doing that type of stuff. Just giving you insights of how data is such an important parameter in real estate, and access to data is zero to investors today.
Excellent. So obviously, I've covered the point that when we talk about diversifying the investment portfolio, again, further in the investment class, diversifying further makes all the more sense because whomsoever doesn't know the other markets. So probably, right, it's very difficult, as you said, just every within the state, within the city, you have got probably just within the state, multiple cities have, adopts different kind of practices. So alternate investment in a nutshell, I can just probably put it in this way, I guess. So just you could diversify whatever investments you have. Even in case you have got multiple investments, you find it difficult to just literally manage it. Instead of that, you just bifurcate here, you just put it in multiple alternate investment options, thereby you diversify. And you're also just getting the value, which probably you would have got by personally investing there. You don't just go in person, you don't do the title study, and you don't do anything. So actually just you end up just getting the same kind of appreciation or a better appreciation as the analysis goes in depth. One is appreciation, other one is a rental. That's amazing.
Yeah.
That's the reason actually the craze has gone up, right?
Now, I think we're going to go into the specifics of Strata in general, because we spoke about the industry as a whole now. So let's talk about Strata and the kind of projects you have launched, because from what I see, you've launched projects across the country. But I'd like to know what are the different kinds of projects you've had and what has the track record been like in managing these projects in general?
Got it. So I think we're the only platform in India right now which has offered 4 asset classes for investors to invest in, right? So we have office space, we have retail, we have warehousing, and we have industrial facilities as well, right? So in true sense, we've told investors diversification means not just areas, but even amongst the asset classes also, right? So you have diversified. So tomorrow, was come, let's assume pandemic hits, right? And you're saying, hey, retail is not doing well, but your industrial, your warehousing is definitely going to do well. Office might probably be lesser affected as well. But again, retail has its own bigger upsides because they are high streets, so you can always sell and you can always get value because there are always 100 buyers for such assets as well, right? So we've invested, in markets like Hosur as a market. With the largest player right now in Hosur with close to 2 million square feet under management over there. In spite of larger funds exist, we're still the largest over there as such. And that's been the growth because that's how manufacturing and warehousing as a segment is growing. And, we want to be in the game for the investors and look at exiting when the game is about to get flattened out as well. Right? So, again, we're not emotional to our real estate, and we tell our investors also don't be emotional. It's a financial transaction. If we get value, if we can book profits, we should book profits and exit the asset, right? So that's the approach which we've taken. We bought multiple office assets, right, from an asset in an SEZ property where Swiss Bank is a tenant. Puma's corporate headquarters is our office. We just about a week back we did a large facility with Tata's Tata Autocom, the entire design center where all the new cars and auto component manufacturing designs are going to happen from this. So it's spread across 5 states as well right now. We've invested in Bangalore, we've invested in Tamil Nadu, which is in Chennai and Hosur. We've invested in Hyderabad, we've invested in Pune, in Bombay, and now in Jaipur as well, right? So we've even taken a tier 2 opportunities because again, growth is obviously going to be humongous in those markets. We've been looking at asset classes very actively in that segment as well. So in true sense, diversification is all about. Most of our returns have been upwards of 8 to 9% to our investors right now. All the yields which we have done, again, one of the highest in the entire industry. Again, it's purely because of the pedigree of our team in terms of identifying those kind of assets and the relationships we're able to build with those respective tenants and landlords. And also about the pedigree of our investors, right? Like when we have Kotak on board, when we have Zerodha on board, we have Elevation, Mayfield, etc. Even sellers are confident that you will take care of my asset, right? Because like I said, we are not emotional, but the ones who are selling are emotional to their asset, right? So that way, when they come and give their baby to us, they want someone who will handle it. They want with somebody with better corporate governance, who has better track record in the past of doing things. And, these are the kind of investments and the kind of assets we are able to attract because of that.
I think that sounds very good. I think over 20,000 customers take your service. So it goes to show how much your people put in. So it's quite clear that there's a scientific approach that is being followed. And there's a level of diversification that's also there. It's not just restricted to geography, but it's also restricted to the sort of asset class you invest in, because there is retail, commercial, and warehousing and more.
Different spaces in the real estate. Yeah, brilliant. And again, actually, just I have this question in mind. So because you talk about maybe the different aspects well within the real estate space, and does your team also just analyze the sectoral risk that is there with a particular tenant? Maybe we talk about auto components, we talk about warehousing. So just any tenant who gets in, is there analysis done on the sectoral risk?
So I would say beyond sectoral, there's another assessment that we do. So one is we do a credit rating, tenant rating, etc., as a parameter. So one is, with the data we have, we are able to know if the tenant, how much other space the tenant has taken, how much other rents the tenant is paying, what has been the journey in that particular thing. Has he always honored the lock-in and the leases in that? So that amount of data obviously helps us to underwrite a particular asset, number one. Second is we go through the balance sheets of the tenant to understand how strong it is. We've got assets where the tenant has a $25 billion debt and makes $1 billion profit every year. Now, it's a recipe for disaster. It can blow out any minute, right? It may be Fortune 500, but end of the day, it's unsustainable debts which you have. And, in this rising inflation and rising rates, that 25 billion will become even more unsustainable for them to repay, right? So these are certain other parameters which we look at before we buy a particular property as such. But healthy balance sheet is very, very important for us to look at. And then understanding what you're going to do with this property is also very, very important before. So we know each and every, like for instance, if we know microplastics as a tenant, which we built a 7.5 lakh square feet factory for them, we know for a fact that, hey, he's using the PLI scheme and is going to manufacture toys. And for whom? For Hamleys, for Nerf guns, right? So we know for a fact what is the end game in this thing, because at the end of the day, it's my property. I want my tenant to tell me what you're going to do with this property, right? So, we do all our thorough assessment and we understand the whole PLI scheme. He has to stay invested for 10 years for him to actually enjoy the whole production link incentive scheme, which the government has ruled out for him, etc., etc. So we track government policies very actively to see, because it's better to back tenants who are also following government policies, because the stickiness of the tenant is also going to be like
yeah, matters a lot, no doubt.
Like SEZ assets for that matter, right? Today buying an SEZ asset is stupid because in office space, because the sunset clause is already there. There are no longer benefits. The whole industry is going behind and saying, please denotify, allow us to denotify SEZ assets, because tenants don't want SEZ assets also anymore, because then there's no benefits. Why do all the SEZ compliances? It doesn't make sense, right? So, so we look at those parameters and go after that. And people who can afford high rents usually are premium companies. So it's not that everyone and anyone can afford these kind of rents as well. And hence we go and back those assets.
I think that sounds wonderful. I think now we're going to go into the aspect of returns. I think you've already given us a glimpse of the sort of return that people can expect. I think rental yield of around 8 to 9% or so. But given that the alternate investment space will only grow in the next 8 years or so, because right now it's a $200 billion market and it's expected to become a $1 trillion market by 2030, which obviously translates to around 13% of contribution to GDP alone by 2030. So I'd like to hear from you on the sort of returns projection that one can expect from Strata in the coming years.
So we're very conservative, to be very honest, right? There are multiple alternative platforms who promise, or at least project 20%, 25% returns, 18% returns. See, we are very conservative, and it also comes from the pedigree of our investors who are invested in our company as well, right? And hey, it's always better to under-promise, over-deliver rather than over-promise and under-deliver, because imagine you got 12% as a targeted, you made 11, people are still fine. But if you promise 20 and you make 11, 20, 12%, people are going to be pissed off, right? Because they come with this mindset that you as an asset manager see this and you are able to generate that kind of returns, right? And hence I'm deploying your money, right? But otherwise, on an average, we look at 12 to 14% kind of unlevered IRRs. We're taking care of our first leverage investment through a platform, which will enhance IRRs to about 14 to 16%. But that's pretty much the ballpark to it, right? Like you mentioned, 200 has to be $1 trillion. You can't only have foreign participation for this, right? Like China, as an example, is 80% domestic participation in real estate. It's only 20% foreign capital. India is 90% foreign capital, only 10% domestic. Right. So why is that? I mean, why is domestic? Like most of the funds who are looking at entering India, their IC keeps questioning that who will buy you out? Correct? Because the other funds are also taking money from the same LPs, right? At the end of the day, the big 5-6 boys are the ones who are deploying money. Question comes to them, who's going to exit you out, right? Like, so unless retail participation or HNI participation does not come into this sector, it's not going to grow. And this is where we feel we are in the epitome. I think from a business standpoint, our timing is the only thing which we've done right. Nothing else, everything else is common. Nothing stops you from starting tomorrow or anybody else to start tomorrow. Like what ma'am mentioned, by the time the webinar goes, there might be 3 other companies, right? So there's absolutely low entry barrier. Everyone can, but it's all about for an investor to understand, who am I backing to? What is the track record? Like you mentioned, who are the investors who are, their venture capitalist investors? Because again, all these things matter if this company is going to stay longer. Because, let's assume the whole 2000 time, 100 .com companies came and, how they sustained, right? It's very important. So, the ones who sustained were the ones who were backed by the great companies, who've done well, the management is great. And that's the kind of investment you're going, right? So I keep telling my investors, when you're evaluating us, just don't evaluate for the property, evaluate us, right? Who we are, what we've done, what's our track record, everything about us before you decide to do. Because when you're backing startup, it's only 20 to 40% you're backing that particular property, but you're backing 60 to 70% on startup's capability to manage that property, right? And ensure you get monthly returns. There are tenants who don't pay rents on time, right? Or who don't pay rents also. It is asset management capability to follow up, to keep getting it, ensuring is there, or evict him, find another tenant, XYZ things, right? And that's what we do it very, very proactively.
All right, then. I'd like to ask Manita ma'am to go ahead with the next question.
Yeah. The thing is that you spoke about actually just investors should obviously consider as to which company floats this alternate investment, right? So that matters a lot. So the background of company definitely matters a lot, and the background of the founders, what's been their expertise, and will they be able to sustain this heated market? As you said, just a lot many vendors are just coming, and it goes definitely just one has to just analyze as to just which company is long lasting, no doubt about it. And I have a question related to this one. What kind of approvals Starta as a company carries?
You see, your question in terms of registrations which we have?
Yeah, maybe just under which regulatory body you would report to?
So currently we are a RERA registered platform as brokers, because that's the only RERA certification. Either you be a developer or a broker. There's no asset management RERA registration, unfortunately, which we fall under. So that is what we are. Apart from that, our companies are governed by Companies Act, where all the other regulations around that is there. We are floating our AIF, which will be SEBI regulated very, very soon. We've onboarded one of the heads of Ascendas, who's joined us as the head of the fund, and he's going to drive the entire piece. But yeah, that's how the platform is operated at.
No, that's brilliant. And maybe in a nutshell, can you just tell me what are the disadvantages in investing in alternates?
Well, ma'am,
because so far we have been hearing on the advantage.
No, absolutely, disadvantages are many. More than disadvantage, I'll say risks rather, as a better word. So one is, like I said, you're backing a platform. So if you're backing, let's say, a platform with no pedigree, with no background, just hearsay you invested into it, chances of your money getting stuck is important, because if the platform does not have money to run the business, they cannot sustain and they'll have to shut down. Right? Because any platform has to sustain, in the sense, which means it's going to take 3 to 4 years for them to burn a little money because you have to create a huge brand name. You have to spend on branding, marketing, technology, multiple things. It's expensive. It's not cheap. We only get 1% management fee. So it's not that we get millions of dollars as management fee. So infrastructure takes time for you to build before you can go. So hence sustenance is very important. You have to look at. So the risk of 40 platforms shutting down is definitely one parameter to consider. Second risk is normal real estate risk itself, right? Like tomorrow, if you're going through a downturn for whatever's worth, although in downturn the real estate have always outperformed, but having said that, worst come worst, let's say such a situation where it's not completely in your control, or let's say a political situation itself, right? Like a war breaks out XYZ with India, with some country, and we have to participate in that war for whatever's worth, which can have an impact as well. So that's another risk which you have to consider. Third, in alternative investments, there's a liquidity risk also which you carry, which is why we're very vocal to people that if you don't have a 5 to 7 year mindset, it's not for you, right? So you park only that wallet share if you have a 5 to 7 year investment mindset, or don't invest. It's honestly the biggest mistake you would do for a 8-9% return. There are multiple other bonds which you could invest in where you make probably 1-2% lower, but which can have a 1 year, 2 year investment horizon. But real estate as a sector, if you really want to have a long-term vision, is why you should come and investing, because appreciation.
This undoubtedly it offers two kind of returns. One is the capital appreciation, other one is the rental yield. So only if someone stays put for a longer period, they will end up getting the capital appreciation.
Correct. So it's a micro market takes time to mature, right? Like for instance, if I have to take Bangalore, like Whitefield didn't become Whitefield in 1 year. It took 10 years to become Whitefield.
Really?
The ring road has taken 10 years, where 35-40 rupee rent is now 77. So you have to stay invested for 77 to become 110, 120, right? It's not that you can double your money. So people have this assumption, 2 years I'll double my money in real estate. There was a time in 2000 to 2010 maybe where people doubled their money in real estate, in a short duration, because that was a boom time, right? Like whatever was urbanization was happening at a faster pace than expected. So there was a period when that happened, but we're no longer in that period, right? I think supply is chasing demand, demand is not chasing supply from that standpoint. So it's a long haul investment. So again, for people who tend to invest for a short term mindset, definitely not worth it, and that definitely is a risk of liquidity which they carry, which they have to look into consideration. So these are predominantly the risks which are there.
Now that we are aware of the advantages and the potential risks involved in investing in this space, we'd like to hear about your current offerings. What are the current investments that you have in store for all our investors? Because you have an office-based opportunity, you have so many more. I'd like to hear from you on what are the different forms of current offerings that you have that our investors can know.
So we had an overwhelming response when we listed our asset last week. It was a 35 crore investment, and in 35 hours we were funding. So that has been the uptake we are seeing, especially. So what we understand from this entire thing, that good quality assets always attract good investors, and investors can take a call very good. Like we had a 9-year lock-in with Tata Autocoms. Obviously people know Tata as a tenant, they know Hinjewadi as a market, metro station 100 meters away. There are multiple other benefits where they see an upside, right? So this is one of the biggest learnings if you have to look at, right? So as much as people say, hey, stock market is stumbling, liquidity is drying up, hell no. If you can raise 35 crores in 35 hours, clearly money is there in the market, right? People are not investing because they're scared, or they are because of so much uncertainty around. But in reality, our biggest learning is there's enough and more money in the market. Liquidity exists for good quality investments and good quality assets. So after this, we are doing an office asset in Chennai, where we are leveraging, most likely thinking of leveraging the investments, because a lot of investors have come back and saying, hey, I'm in the 43% tax bracket, 30% tax bracket. As much as I love rental income, but my money is not making money for me because I have to pay a huge tax leakage. Can we leverage these investments and play only the capital gains tax business, because that can make phenomenal returns for me as well. That is what we hear our investors. Again, we are as a platform not to impose what we do. It's the idea is to always learn from people and build things for it. Like even a tech platform, we have at least 40-50 investors who literally on a quarterly basis get on a call and keep giving us feedback on how you should improvise in that. And these are senior management guys who I'm sure are getting paid millions of dollars a year. Their salaries every month is about 5, 10 lakh, 20 lakh rupees a month, but they take out time because that's the passion, because they're like, hey, it's my selfish reason. If your platform grows, my money is also growing, right? So I would want to keep coming back and keep giving you, because my investment experience just keeps getting better and better. So that's how we are looking at growing. Right after that, we have multiple opportunities of office space. We're doing 4 industrial assets, in Bangalore, Pune, and Chennai. Right after that, again, very, very strong thesis why industrial is here to stay. The whole China plus one manufacturing strategy, and why we should continue to keep investing into this is the kind of offerings we are bringing on board.
I think that sounds wonderful. I think there are many opportunities that are coming up. All of them.
Just add one point. Sorry, I forgot to mention. We are evaluating or near closure of first hospital asset. So that's another diversification. We have secured a 20-year lock-in with a very, very good tenant. You know how hospital assets are, right? They don't shut down. They get acquired, but they don't shut down as such, and becomes a landmark property, right? Like people say, the property next to Apollo or the street next to Apollo, 5 streets from Manipal, etc. That's how the mindset is. Is one of the asset classes which we are evaluating right now, and we'll soon bring to the platform for that.
That's brilliant. I think I have a couple of questions now. One is, see, what kind of hurdles and threats that you just face in this journey, and further you foresee in this journey?
Your question is threats?
Threats or hurdles that you just face right now. Maybe just it can be in terms of regulatory pressure, or in terms, already just we spoke about this, but still in a nutshell, we thought of understanding as to what kind of hurdles and threats that you face right now, and you will foresee also.
So, ma'am, regulation is always the best for the industry, right? I mean, it's a no-brainer. It only makes the industry more evolved and filters out the people who are not following the rules and regulations of it. Like, for instance, we don't touch a single rupee of our investors. We have Vestra on board. We have a couple of other trusteeship companies who are directors who manage the end-to-end show of whatever money comes gets distributed. We don't maintain a single property document with us. It's all with Universal Trusteeship as our custodians. They maintain our things. So if an investor wants to see, just give us a 24-hour notice. Come with us to the bank. So they maintain with ICICI Bank in their lockers. It's an ICICI portfolio itself. We say, come and see it for yourself, right? There's no questions on that, right? So I would say, so regulation is definitely great, and we are hoping it comes in a larger way and gets regulated. It's going to take a little more longer, at least how I see it, because for regulations, they're too small for them to even consider to think of doing it. But we've been proactively working with a few regulators through the sandboxes, etc., and trying to see, because the threat which we have is when there are 40 platforms, and if 38 shut down tomorrow and good chunk of investors' money gets stuck, is a risk, because the industry will have a risk in itself of its sustenance, because people might lose money. Which is why we're very vocal to people, hey, please don't invest for the property. Invest, like I said, 30% of your investment decisions on the property, but 70% has to be on the team, the entire platform, the investors who are backing it, multiple other parameters, right? So that is one of the biggest hurdles or threats which we see, is if one screws up, we don't want everyone to start perceiving that, we are also shutting down, or we made a mistake, or XYZ. Right? So this is prima facie the risk which we see. Hence, regulation is critical, because that way there are licenses given to only few people. Like Dubai, for that matter, through the DIFC, there are about 100 companies who applied. Only 2 companies got licenses, because they went to and checked, okay, what's the pedigree of you, who are your investors, the management team, the track record of them they've done in the past, multiple other parameters, right? So that's how we look at it, and hopefully there will be something which safeguards everybody else.
Okay, so actually, just why do you want people to choose Strata? Why not other companies?
There's no restriction why you should not choose any other company. I mean, like I said, look at key parameters of the management, the investors who back, etc. But very important to look at track record as well, right? Like how the assets have performed. Nobody checks that. Nobody asks that, right? We tell our investors, please ask us this. And we're happy to give you the entire data for us. So I think why we, I would say, have a notch better from others, if in our opinion, is generally the mindset with which we look at. There are platforms who built, 100, 200 crore book in 5 years, 7 years of time. We've done a 750 crore book in 2 years of time. right? Now there's a vision on how we are able to do it, and how assets, like good quality assets, like a Tata's for that matter, or Puma for that matter, Swiss Bank for that matter, gets attracted to working with us versus any other platform also, right? So this is one thing, is just the mindset with the way we look at being the largest landlords, pseudo landlords, if I have to put it. And when you have scale, you have better asset management capabilities, right? So hence we are aiming to grow faster with the clear vision that, my asset management capabilities get 10x faster because I can play, a little bit of a mafia play, if I have to put it up as a right word, because when I own large, I can always dominate and get the best tenants in my facilities. My real estate partners who work with us would also prefer us because we have a large portfolio versus somebody who has a smaller portfolio also, right? So these are parameters where today it's not a winner take all market, right? So there'll always be, like, US today has 8 platforms like these, all with $1 billion market, but there's one with $4 billion market. As such, right? So obviously the 4 is now scaling up at a pace which 1 billion is not scaling up at that pace. But asset class exists. India is too large a market. Is India a yearly $20-30 billion market? Way more than that, right? So can I look at $20-30 billion per se? Absolutely not. Which means if I'm looking at aiming $20 billion a year, I'm literally looking at adding close to about 500 crores a day, right? From a perspective, which is not our capability today and will never be the capability, right? So, the idea is to, obviously, as an ecosystem, there should be 4-5 players who should be there, who will continue growing, probably then the industry grows. In wealth space, you have an Edelweiss, you have Motilal, you have an IFL, you have Kotak, everybody. When the space grows and there's competition, right? And if you're the only ones, for whatever's worth, I'll be complacent too, right? So for me to stay on my toes, on the edge of my seat, I have to ensure competition exists, and we get the best assets for us. But the only thing, one of the things I fear is, with competition, we don't want people to pay a premium and buy assets, right? So that is one thing which is there, because then we might not do justice to your investors. So we didn't do any business for 2 months, but we're like, hey, we are not paying premium just because we have to do business every month. We'll wait, we'll find the best, and only then we will deploy our money.
Yeah, I have one final question. That is actually just, we started our discussion, you started stating Marwari, business is there in the blood, undoubtedly. So you shut our mouth there itself. And then actually just, maybe, right, having said that, you also spoke about the kind of assets that your dad owned, which inspired you probably to just get into the real estate space and just bringing the commercial investments to even the retail investors kind. So just, have you invested your personal money as well as your dad's money?
Through our platform?
Yes.
So we've made one investment through our platform as of today, but I strongly feel it's conflict if my parents invest through the property, because, or in general, if Starta starts investing through the thing, it's a major conflict if I have to put it up that way, because unlike a AI structure, which
is closed,
right. You can't take out,
is the class
liquid platform, right? So tomorrow I know tenant is leaving 3 months from now,
True.
And I go to one of the investors and say exit. So if somebody says, we put in our money, etc., and will not exit till the end, please understand, at the end of the day, it's their money, they're not going to risk it also, right? So in our opinion, it's a huge conflict. We made only one investment in the pandemic when we did our first property. Many investors like, hey, it's pandemic, you put your money and then we put up, right? So
in AIF, obviously the definition is going to change. Yeah, that's true.
Correct. So, but we don't invest. Family doesn't. Also, in fact, we are restricting even our employees' families to participate as well. Immediate, we can't extend to their extended families because it's impossible beyond the point for you to. They might not even disclose if they're investing, right? So it's better to say immediate family guys are not allowed. Rest, you can't literally control beyond the point. Like, I'm not Goldman Sachs to monitor everything what's happening and go deep dive and check the family tree, etc. Right? So, but yeah, we don't. Pure conflict, hence we don't. We've invested in our company a sizable amount of money as our portfolio, and about my company and the stake which we own is the largest concentration of my portfolio.
Excellent, I think
that sounds wonderful when you think about it. I think we have got a wonderful understanding of the real estate space, the alternate investment space, and Strata as a company and what it has to offer. And I think that pretty much wraps up this discussion of ours. And this has been an exclusive meet with a co-founder of Strata. And I have Ms. Vanita, who is the president and CEO of C Profit. And I'm Adarsh, the co-founder, the founder of Finances powered by Deep Pockets Technologies. I'd like to thank Mr. Sudharshan for coming by. And I'd like to ask whether if Vanita ma'am would like to add anything.
Nothing more. I think actually just we discussed in depth as to just we started as to just how real estate as a sector is positioned as an alternate investment. How is it being positioned? And it was really exciting to just go through your part of journey, because you spoke about, you tried just covering every aspect in the real estate space. Maybe not actually just literally just adhering to only the maybe just commercial aspect alone. You just got into the industrial space. And you try just covering as many cities as possible, be it Mumbai, be it Chennai, be it Hyderabad, Pune, or maybe just actually just Jaipur now. So that's brilliant. And you have not restricted yourself to Bangalore alone. So we got a very overall, a very clear picture as to just where Strata is sailing today, and all the best wishes to you, Sudharshan, and very good to just have a youngster with actually just a very sparkling brain, but so much of actually just a focus on the business. And thank you so much for just giving us an opportunity to interact with you. And
yes, thank you very much. And I'd like to ask you whether if you have any closing remarks because before we close any session, we often like to ask the person himself as to whether there's anything that you'd like to tell the audience, because the audience is eager to invest in the space, but they'd like to know what it is. And I think they've got a good understanding, but we'd like to hear from you on whether there's a message that you have for the audience.
So I have just one remark, especially understanding with my friends, etc. As such, I think personal finance as a segment in India is the most underpenetrated. People don't understand the value of having a wealth doctor. If there's any head pain, you go talk to a doctor, right? What do I do? But when it comes to money, people don't do that, right? People always feel they know it all. It doesn't take too much money to get an advisor on board who can advise and create a portfolio construction for you and create a thing. So in our opinion, any investment calls, whether it's Strata or any other investment, you need to understand every bucket, the long-term, short-term views, when you need what money. There are multiple things which go into, and definitely look at having a personal advisor before you make any such investment calls. So personal wealth advisory is in your opinion, you know it all, but definitely you don't know it all.
So that's true. Thank you so much for highlighting the importance of wealth manager. And we also just got overwhelmed when Prime Minister Narendra Modi just spoke about the importance of having a wealth manager. So really exciting to hear all these things. And I would like to end the session probably with a disclaimer, because the discussion that we had with Strata is to just make our investors understand as to just what is alternate investment space and what kind of offerings Strata as a company has got. And as it's been just managing closer to 1,000 crores, already crossed 750 crores. Let me take the maybe just added advantage to say as closer to 1,000 crores, so that Sudharshan may get excited. And again, actually just this disclaimer is to say that we we personally don't promote any kind of product, because our product comes as majorly as advice, and actually just being a distributor, Adarsh could distribute the products, but still actually we handpick the products and we take it to the investors so that the investors doesn't get puzzled with multiple options that are there in the market. And definitely just as a investment avenue in the real estate space, one has to do the due diligence, and one has to just sit and spend some time with us to just understand the nitty-gritties and investing in this one. And if you're an investor who is looking for liquidity, then maybe just in a short-term liquidity, then this may not be a viable option to you. And as Sudharshan also already highlighted, if you want to just marry a property, whenever you buy a plot, you don't just exit in a day or two. You take actually just several years, right? Whatever Whitefield you see today, definitely just I've been there in Whitefield, maybe even before 15 years, and I was all alone standing there. I remember the day. So that's the reason actually just it's suitable for an investor who can understand the risk that is available and the risk and the returns that real estate as an asset class can just deliver you. And definitely just spend some time with us to just understand more. And thank you so much.
And I think I totally second what ma'am said. I would like all of you to discuss with us to find out the pros and cons of this product even further, because there's nothing better than a physical discussion. But on that note, I'd like to thank all of you for listening to this, and we cannot wait to hear from you soon. Thank you. Bye.